Hello, folks, and welcome back to another edition of Money in Motion. Today's title, I guess, is going to be about TLT for like maybe 2 minutes, and we'll talk the rest markets. But figured it was a interesting, hot topic that everybody was discussing yesterday.
Oh yeah.
So might as well get a nice clickbait title out of it.
Hey, and not only that, but like Phoenix says, he says he loves today's topic. He wants to learn more about it. So the clickbait worked in some degree, but we'll definitely cover TLT and the bond market because, like CJ said, that's all anyone was talking about pretty much yesterday. But also, I want to, before we start the show, just say what up to Phoenix, what up to some of your assets, what up to Roz, what up to Jenna, what up to Ryan, what up to you guys see now. Love seeing all you guys in the chat. Hope you're doing well. And yeah, thanks for participating. But without further ado, let's dive into things. CJ, you want to start with the title of the show and talk about TLT, or would you like to start with broader kind of overview?
The point I wanted to make about TLT was you're seeing a lot of people talk about how it's in deep value territory. It may be in deep value territory. However, I think what I want to echo the most is just the sentiment of that trade. It's like, it reminds me of a couple different trades. One, natural gas, when it kept down, everybody was talking about buying it. And when you looked at like COT data, it wouldn't have given you a signal to enter. So in many cases, COT, its best quality in many cases, ironically, is keeping you out of bad situations as a risk manager. And that's
as good as putting you in good situations. I mean,
more or less,
if you really think about it. But sorry to interrupt. Continue.
Yeah, so we're just seeing a lot of similarities between positioning. I'm not trying to make any predictions. This could be the low in like ZN and ZT, but what I'm saying is that if you're going to get long here, or if you're going to buy TLT, this is something that's been going down for like months straight. At least wait for some type of market confirmation, whether it be price action, whether it be a news failure. And in my opinion, we just haven't seen any of that yet, because we're seeing sentiment that echoes stuff like natural gas. We're seeing stuff that echoes sentiment of people who were short stocks all throughout Q1 and Q2 saying, this has to happen. Nothing has to happen in the markets. That's kind of the point we were ranting on yesterday. It's like the market's going to do what it's going to do. Nothing has to abide by economic like laws or principles. They usually do, but they don't always have to. So saying that, rates going up automatically means the stock market has to go up, or TLT going down automatically means that stocks have to go down, I think just kind of lacks nuance overall. But
yeah, it's kind of reminiscent of our DXY discussion yesterday. Like, there have been times where the DXYs ripped to the upside and equities have as well. So nothing has to, move inverse correlation. And I think that's definitely true with TLT as it approaches, what I'd consider to be, and what many traders would consider to be, extreme levels here, down at the lows. But
they just seem to be. One last point. Go
ahead.
Move on. It's just like I wouldn't look. Like, I saw a tweet yesterday that really bothered me in terms of like the mentality of traders. Somebody said like, "Oh, the equity market dummies. It takes them a little bit longer to react to what is going on in the bond market." It's like, you're calling the most efficient market in the world like full of like that is literally the most efficient market in the world. And if something's happening in the bond market, everyone is aware of it in the equity market. It's not like this jail where you don't get to talk to each other. It's all transparent. And to me, the reason why equities have been going down, I guess maybe this isn't like the reason, but this is one of the things that you could have said in retrospect, is like the positioning. Everybody really came, when you looked at the COT positioning, everybody came in about the NASDAQ and the ES really close to the highs, especially on that second high. And when there's lots of buyers at the highs like that, and you have a little bit of risk off price action, there's nobody left to absorb like the selling. So we're going to continue to go down, in my opinion, until people really short or puke those longs, in which case we can kind of begin a new type of cycle because you're starting, I think, to see bullish trend followers get stopped out.
Yeah, it does look to be the case. Anyone that was kind of riding that bull wave, getting stopped out. And just to throw this chart back up, this is the ES chart, and I know we've been harping on it, but like this, like you pointed out, this second high right here was really the confirmation that this kind of extended period of bullish price action was over, in my opinion. And you're really seeing it reflected in this last week of price action. Now, people wonder, how low can this go? It went up pretty quick, right? This is basically a 2 month period of us climbing from what was not even just a low point in terms of price, but like low sentiment, then all the way up to 4,600 before getting rejected. So, obviously today might not be a good day to enter. I think we do find a little bit of support here, where we've previously found some resistance. It also lines up nicely with this previous high here. So I expect to find a little bit of support today. If I switch to the 15-minute chart, it looks ugly. We gap down to start the day and then continue with this negative price action. But I do expect a little bit of a reversal or at least some consolidation later today. However, what I will say is that I am going to be looking to play the equity market to the downside here in the coming days to weeks. And where I'll be looking is in the Magnificent Seven, particularly one stock that I think looks vulnerable. And it's down 2.6% today. When I was looking at it before the show, is only down 1.5%. Done a whole percent since then. But Google, to me, looks particularly vulnerable, and it's falling hard today. I wouldn't touch it today. You're gonna have to pay a lot of money if you want to buy options. So I wouldn't touch today. But I do expect this one to come down, retrace back towards the 115 level. It was ultimately my target for Google. I'm thinking about just selling some calls into this, so that if price does go up and we see like a short squeeze, I don't get burned too bad and I can just, dump the contract for a slight loss. If you need any help setting up, or learning how to sell options, just hit me up in the Discord. I'll walk you through it or just send you a PDF that I have made on um, that strategy. But I think that that's a valid approach to trading Google right now, is selling calls, and aiming for this kind of 116 level. I think we could get there a lot sooner than people think. And I think, even like I said, I don't necessarily want to be holding this into earnings. So I'm just talking about pre-earnings price action. So I think we could plausibly hit 118 for Google prior to earnings. And if we do get that, I'd be out. But what I will say is that I'm not buying today. I'm waiting because I think there's a possibility that we get some sort of, based on the fact that we saw this extended period of consolidation at this level here, we see something similar here where, yes, it's been, pretty rapid to start the day, but for the rest of the week, we kind of just chop around like this. You don't want to buy a put up, or you don't want to sell calls into that because then you're dealing with the theta. So I'll just wait a little bit, wait until it's kind of flat on the day, and then go ahead and enter a trade, because I do think that it's not just going to be straight down. I think we'll see a little bit of consolidation, even if it is just bearish neutral, and you'll have a better chance to enter than a day where it's down 2.5%. So other opportunities include NVIDIA. The AI wave really drove this thing higher, obviously. Um, and this one, I still think is going to eventually fill this gap. But with so many eyes on it, it might take a while. That being said, I'm just not, I don't have the conviction that this thing climbs any higher, just based on the fact that the AI narrative seems to have peaked right at the top of the price action for NVIDIA. That being said, I have heard rumors that Amazon is set to make an announcement about their AI soon. But again, this is another stock that looks incredibly vulnerable. A breakdown below 125.5, I have marked as a trigger for entry for a short position. So watch out for that as well. And it would be the same thing as Google, just minus the gap. There's no gap here with Amazon. But I think, plausibly a retrace down to this level here, about 115, where we saw the previous swing high, I think is a very valid play. Either buying puts or I'd probably sell calls into this because, and again, I wouldn't do it today because we are at a level where we might see some support, get some consolidation. It's already down 3% today. You're going to be paying a lot if you want to be buying it today. So just be patient, wait for it to maybe consolidate tomorrow. Some of these bears take a little bit of profit, and then go ahead and enter when the premium's a bit lower. Because right now, just looking at some of the options for Amazon and Google, you're going to be paying a pretty high premium if you do want to enter those positions. So those are, I think, of the Magnificent Seven, I think Amazon and Google look the weakest. And they are down the most today, which is unfortunate because otherwise if they were only down 1.4% like Meta or like 1% like Tesla, I'd be looking to enter. But the fact that they're both down like 3%, you're going to be paying a lot to enter options position today. So I'm staying away from them today, but I will be looking to enter if we get some sort of bearish neutral consolidation in the coming days. So long-winded rant, but that is kind of what I'm looking at from an options perspective. And I think there's some serious money to be made here in the coming weeks as this market volatility really picks up.
Appreciate the equity analysis of those two.
Sure thing.
Let's see. Were you gonna mention anything?
I was just gonna ask you about Bitcoin real quick and what your thoughts on, like, if there's any hope we see any sign of independent strength out of Bitcoin, or do you think this thing just follows the equity markets and we go down?
Yeah, I mean, the obvious answer seems to be the latter there. So, yeah, I mean, it's just going to be sluggish. The only thing that's really been interesting is ETH BTC, but that's like, kind of a crypto native trade to begin with. So, a macro top in equities is going to be a macro top. I said it yesterday. Like if this is the yearly high and we do not make new highs the next few months, that will likely be the same for many other assets, including crypto, and a lot of it plays off the dollar strength as well. Like a lot, equities have been going down, but a lot of it plays off the dollar strength.
It's funny you say that right as this comment came in. Dollar up, Bitcoin down. But what I do want to point out to you real quick, CJ, can you get your thoughts on this? The dollar, and this is pointed out by Phoenix. Thank you for pointing this out. Always, we can't catch everything, but the DXY is on a TD sequential 9, also lines up with this level of resistance here where we kind of first found support during the crash. What do you make of that for the DXY being on a TD sequential 9? Do you think we see a bit of an interim reversal, or do you not give a whole lot of credence to this 9 given the kind of macro conditions that we're in right now?
Yeah, I mean, resistance is one thing. Yeah, I don't know. TD9s, the more I've looked at TD9s, the more it kind of just seems like numerology. And like the 9 kind of starts a new cycle. It could be bearish or bullish, but it's just a new cycle. I don't know. I don't really look at them anymore, but the positionings, it's starting to get back to neutral. Speculators are really buying the dollar. If they keep buying it and it keeps going higher, that's, a totally possible thing. They could also get trapped and their longs could be wrong in the short term. But, if rates are going to continue to going higher, the dollar should keep grinding higher. But I mean, we'll see. It's I don't have a whole lot of conviction to trade FX or the dollar right now. The only trades I have are kind of shorts within certain commodities that are kind of still towards a bullish posture in the dollar.
Yeah. Yeah. And if anything, I would say that this TD9 end of an era. That's funny. But just looking briefly at this, you can see there's been instances in the past where we've had other TD9s, right? Where it's been TD9 top of an uptrend. Now this one is more of like a pure TD9 in my opinion. Like it's at the top of an uptrend. I think we see something kind of like this tomorrow, where it's like a negative day for DXY and risk assets bounce because the bears get overzealous today, and the bears get overzealous today, and they try and jump in, and we see a little bit of one, profit taking from the bears that were early and right, and then two, covering from the bears that were a little bit late. And we might see a little bit of positive price action tomorrow. I think that is a possibility. And the DXY being on a TD9, I know CJ's thrown it away, but I still think there is some validity to that indicator in certain instances. And like this right now, the way the dollar is positioned, like it's been in up only mode. This is where a 9 would plausibly kick in. But as you know, Phoenix, there can be a 1 to 3 candle correction period following the 9. So it doesn't, even though we're getting it today, like that doesn't necessarily give us all the information we need to make a trade for tomorrow. We could see plausible continuation. So he's taking it off his shirt.
I want to make a point about this. Don't just listen to me if I say something. If the TD9 has worked for you and made money, and you have historic data supporting signal generation for using the 9, there's no reason to take it off your chart. I just didn't find it. Personally, there were 2 reasons. I thought it kind of made the chart look a little too busy, and I was able to basically tell the same information just by looking at hammer candles, or like you can kind of tell already when it's close to a 9. Yeah, I think looking at candlesticks and like momentum and positioning is it's really all I needed. And like the signal generation, I know. The signal generation process is somewhat overrated in markets. I think the most important thing is not necessarily when to take a trade, but how to size the trade. And then ultimately, once you're in, how you manage it. Those are the most important factors. I think signal generation actually might be the least important. And if you flipped a coin, in certain instances, it might end up working better than the TD9. But back to my initial point, if it works for you, there's no reason to fix anything that's broken. I just didn't find it essential anymore.
Right. Yeah. It's not like it's a be all end all indicator. It's not like you see the 9, it's like, oh, reversal tomorrow. Just use it as part of your analysis of the general markets, right? Like it shouldn't be signal generation, like CJ said, I think is highly overrated. Anyone that thinks that like there's a signal out there that can tell you when to buy and when to sell, just one indicator, that doesn't exist. If it did, that we'd all be rich, but it doesn't exist. So you need to factor in all these things together and mesh them all in order to make a kind of mosaic of the market and fully understand the picture. I think the DXY and TD sequential is a part of that. But again, like CJ said, signal generation isn't the be all end all. Just because it's on a 9 doesn't mean it has to reverse. And it's proven that plenty of times in the past as well. So, but I did actually just want to briefly mention ETH BTC. Or actually, I'm not going to mention it because we're doing Trading Rebellion today with Nick.
I mean, it still looks pretty good. I think just the coolest thing about that trade is that it's working and the NASDAQ is down, well, is it still working? Let me check my charts. You never know when we're streaming during the open. There's a lot of vol. How's ETH BTC? It's still green on the day when you have ETH and Bitcoin both down. So that's that's a trade that like is doing its job. And that's what I think is the Sorry, I was just getting a little distracted by the participation.
How can you not read the chat and look at a chart at the same time? Like it's oh man.
Is there a you were a psych major. Is there a psychological disorder where you can only focus on one thing? You have an inability to multitask?
We shouldn't be throwing around these terms without a license.
Yeah, you got the DSM under your desk there.
Yeah, the DSM-5 would probably say that you have ADD or some form of ADHD. But I don't think that's any secret to anyone that watches the show. Sorry. All right. Please continue.
I don't even know what I was talking about.
You don't. Yeah. You don't want me psychologically diagnosing you live on the show. But
no, were you talking about ETH BTC? Yeah, but I think the coolest thing about that trade and finding trades like it, and that's what it's all about in markets, is having like a consistent edge. And I don't think a lot of people trade the BTC pairs, at least not as much as they should.
You're so right. You're so right. The retail crowd does not. They just trade in USDT. Like 95%, if I had to guess, trade in USDT when trading in the Bitcoin pair. Not only is much more risk averse. Sure, maybe it does limit your, possible upside potential, but it's just in terms of like,
or you could just use more leverage because it's not going to be as volatile.
That was my next point, is like, it's not going to be, when we're talking about like a downward sloping chart, right? It's not going to be like a bunch of like chops up and down, right? Like you'd see in a US dollar chart. It's going to be more smooth because it's moving with Bitcoin, and Bitcoin will also be experiencing those movements when ETH does as well. So it's a lot smoother of a chart. It's like comparing a bunny hill to a triple black diamond with a lot of moguls. That's the kind of comparison we've used. And I think that, if you haven't learned how to trade in the BTC pair, it's something that you definitely want to learn before this next bear market, because I think there's going to be some tremendous opportunity in trading altcoin BTC pairs. And really the great part is it's like a plant that requires no management. Like you don't need to water it. The reason I went to this analogy is there's a lady selling plants in the lobby of my building, and I'm like, which one requires the least amount of maintenance? And she's like, this one right here. Basically water it once a month and you'll be good. It doesn't need any sunlight. I'm like, all right, I'll take that one. And that's kind of like what the ETH BTC, or like what the BTC pairs are like. They don't take a lot of monitoring. They don't take a lot of like, you can kind of sit back and relax, unless you go with the CJ approach and toss on a ton of leverage. Then you can't really sit back. But I think for the most part, you can just sit back, relax,
set your alerts.
Yeah, exactly.
Go do something you enjoy.
Exactly.
The beautiful thing about trading, if you do it right, is that it's unique in the sense that it can create amazing freedom in your life to do things that you want to do. Whereas at a normal job, even if you're a high-paying CEO, like that's a lot of work compared to the amount of money you could make trading. Responsibility, you're responsible for hundreds of people in certain cases. But if you're like an elite level trader, I mean, you could make just as much money, looking like me, sitting in a apartment. So anyways.
Yeah. If someone that looks like you can make money in these markets, I think anyone
All
can.
right. We're going to wrap the show up now, folks. I hope you enjoyed. Don't forget to like and subscribe. It's a great way to support the channel. And don't forget to check out tradethechain.com for a 14-day free trial where you see all of Monte and I's trade insights and comments in real time in our Discord server, as well as a very interesting sentiment data platform for crypto. That's definitely encourage you guys to check out. But appreciate that, and have a good one. We'll see you back here same time tomorrow. And then we also got Trading Rebellion in a few hours. So we'll see you then, and take care.